every of our business decision should be based on a clear information and clear insights about the industry and several metrics that indicates financial efficiency and financial health. Welcome back to Savvy Market Channel. Today we'll be evaluating the earnings per share of GTCO, which is Guaranteed Trust Bank of Nigeria. So they used to be GTB, but they recently updated their name, and they are now GTCO. So today we'll be evaluating what their earnings per share look like, and this evaluation is spanning across just 7 years. That's from 2017 to 2023. So real quick, let's first of all look at what earnings per share is before we go deep to see what the earnings per share of this company looks like in the past 7 years. So the earnings per share is a financial metric that calculates the profit attributed to each outstanding share of a company's common stock. So this means that it represents the amount of money that is earned by each share that is bought by investors, and this provides insight into a company's profitability and its performance. So a higher earnings per share generally indicates better financial health, and it also reveals that there are potentials for future growth in that particular company. Now, a company with a decreasing or negative earning per share may indicate that it is losing money, and probably too much of it. So a company that has a steady track record of reporting increasing EPS ratios over time is considered profitable. So this should give some clues on companies that are worth investing in or that are safe to invest in. So just check the track record over time, and that would inform your decision, and its stock price will likely to increase if they have been consistent. So if a company's earnings per share has been consistent over a period of time, now there's potential increase. There's a chances that the probabilities are high that the earnings per share would increase sooner enough. So, and this metric actually can vary from industry to industry. So it is advisable to compare ratios across similar industry within the same industry, and the quality of an earning per share can be influenced by a company's reporting or earnings and expenses. So these are some factors that can actually influence the earnings per share. So like I mentioned earlier, a higher EPS, which is earning per share, can indicate higher profitability and are generally considered better. So the higher the merrier, the higher the better, the higher the safer, the higher the more profitable. So that is a clear light and a clarity on what an earning per share is. So per share that you buy, what are you earning, what are you gaining from each share that you buy? So if a company's earning per share is decreasing, it means that if it continues like that, they might actually pack up in no time. So it shows that there is a decline in the company's financial health. So let's dive in back to what the earnings per share for this company GTCO is saying. So GTCO is actually, for those that did not know, this GTCO is a bank in Nigeria and across Africa as well, that's in the financial industry, and they are one of the big fours or big five when it comes to the banking and financial services in Nigeria. So let's see what their earnings per share was like in 2017. So they began with 5.8 5.94. Now you can see, let's just take a forward into this chart. This is a trend line that's showing. This is a rather, yeah, we can also put a trend line, but this will obviously give us an upward trend. Let's see that. Let's see. So this would obviously give us an so just give me minutes. All right, oops, here we go. So we could see here that let me format trend line so we could see. I am trying to make it look bit okay. All right, so I just included the trend line. I hope that you can see that. Let me take a zoom in so it becomes clearer. Okay, yeah, so we can see the trend line. Yeah, I knew it was going to be an upward trend. So all right, now in my explanation earlier, I said that when the earnings per share is consistent over a period of time, there's a very high likelihood that it would increase. So we could see here that they maintain consistency in their earnings per share across the years, even though there was a slight decline in between 2021 and 2022. There was a slight decline. Even up to 2022 there was a slight decline, but then fortunately for them in 2023 it skyrocketed by a significant leap took place. So this was took a significant jump from 5.95 to 19.07 naira. So okay, now in 2017 they began with 5.94 earnings per share, 5.94 naira earnings per share, and it grew to 6.54 earnings per share. And I think I've actually explained all that this chart is saying earlier in the video. So, and this chart is actually explaining, and it's typical of my explanation. It's just a practical experience and visibility. So it's just giving a visual representation to all of what I've explained earlier. So this is actually it's showing the financial health and the financial efficiency when it comes to their earnings per share, and it's pointing in a negative direction, since we see, number one, we see a consistency in the earnings per share, at least growing. There was actually a slight growth, yes, from between each year. It was growing from 5.94 to 6 to 6.9 and then to 7. So probably there was an influence on the, I don't know if this decline was due to the COVID-19. The decline was due to COVID-19. I do not actually know about that, but then I see here that there was actually we could see here that there was a slight decline. Let me take a zoom in. A slight decline between 2020 to 2022, but that's fortunately took a turn in 2023, and we could see that. And then we trust that in 2024 by now they would have gone up to about 25 or 30 or so, if this trend happens to continue. And there's no that's actually all about the earnings per share of this company, and that will be all for this video. There's not so much. So the earnings per share is a very crucial metric to look at when you intend investing in a company, or when you are researching a company on who shares to buy. This is a very, 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 very good place to go and check for the consistency, check for the magnitude of the value, and what is it like, what has it been like, not just what it is like, what has it been like, how has it moved over the year. So from how it has moved over the year, you can predict how it will continue to move. So observing the highs and the lows is essential. All right, thank you so much. That will be all for this video. Thank you so much. Yes, and as is the custom, do not forget to like, and that would encourage me to make another video like this. Do not forget to like, subscribe to the channel, click on the notification button, and you'll get a notification as soon as I drop another video and another amazing company like this. So, and then until we see again. Also, if there is anything that you would like to know or another thing you would like me to make a video on, kindly just drop it in the comment section and I will attend to it. Thank you so much, and do enjoy the rest of your time. Bye bye.